Hey guys, what is up? It's Dusty here and welcome back to another episode of the Daily Crypto News. And today, oh boy, do we have a lot of juicy crypto news to talk about. There's actually a crazy amount of controversy in the crypto space right now, partially about FTX, partially about the SEC, and partially, as you guys probably already know, about the FOMC meeting. Well, I have to clarify, the FOMC minutes, not the great FOMC meeting that everybody is waiting for like a freaking baboon, but nonetheless rather important. Now, since we have this much news, I'm asking you guys one thing. Make sure you press that like button and let's go through this news in a rapid pace. Just bam, bam, bam. First of all, Genesis, you guys all know it by now, a very well-known crypto lending platform. They're going bankrupt. Sure, they've been going quote-unquote bankrupt for a little while, but the problem is that they're not the only ones. Even though they're not as bad as Coinbase, which we're going to get to in just a second. Genesis going down, well, it's just a step in a lot of other companies going down. And what I meant with that Coinbase remark is that the fact that Genesis is going down because they basically can't raise more funds, they can't find more money, ironically, is not going to cause that many others to fall down in terms of a little snowball. A couple of other platformers would be way worse. Now, one of the other ones that's reportedly so having some trouble is Nexo. Now, this is not confirmed at all, but there's an article written about it, so I think it's worth a little mention. This article says Nexo Capital blocks investors from withdrawals, claims investors. I have to be a little bit specific here and note that this is not a withdrawal from right now. It just states that at some point, they try to pull out more than 100 million British pounds. However, it then states that they were basically blocked from taking this out for over a year. And they said that they were threatened by the company that they would be blocked from any transactions unless they sell the company's native tokens at a huge discount. Consequently, they were forced to sell Nexo's native tokens, costing millions back to the exchange at a reduced price. Again, keep in mind that this is just a claim. I am sharing this because this might be true, not because it is factual. This, in my own opinion, is almost impossible to verify because I think Nexo would deny a claim like this, and these guys, the allegers or whatever, well, yeah, they're obviously going to say it's true. I just basically am reporting on this to maybe see some more people who would like to speak up on the situation and notify us if they've been having some strange troubles with Nexo. Put it down below in the comment section. Now, there's a couple other things which have happened. There's actually a really good thing that's hopefully going to prevent exchanges from having trouble in the future, which is CoinMarketCap's new Proof of Reserves feature. If you go to the website, you'll basically find a new little icon that showcases, hey, these guys have their reserve data out to the public, and so you have less of a likelihood of getting completely shabammed. On a completely other side of things, there's also an article about Coinbase over on BNN Bloomberg. Coinbase debt was canary in the coal mine for the crypto meltdown. All this article is stating is that Coinbase bonds have tumbled this year amid the crypto winter, which is logical. We obviously first had the Terra Luna turmoil and then the FTX meltdown. Both of them caused a massive disruption in the price. But now the bigger fear comes from people thinking, well, is because of all of this, Coinbase going to be able to stay afloat forever, basically? Aren't the internals doing really, really bad as they're most likely making some crazy losses at this time as well? And honestly, that's a very interesting point. Which is why right now I'm going to tell you guys to do something. You can always find, out of any of my videos, right, a description that has a couple of different links in there. This is to get yourself a hardware wallet right there. It's the one that I use. Ledger, it's just the one that I personally use. It's the best way to keep your money safe. Then you have a couple of exchanges that I personally still like BitGet, Bybit, and if you scroll down below, actually, you'll find a couple of other exchanges right here, for example, like Binance is in the middle right there. There's also always a couple of other links, like for example for a VPN. I personally use NordVPN, and my other social links are in there as well. Moving on, let us talk about the FTX drama for today. An interesting one. Turkey has seized assets from the FTX founder Sam Beckman Freed. Turkey has seized the assets of Sam Beckman Freed among an ongoing investigation as per Turkish Treasury and Finance Minister. Very interesting. An inquiry has been opened into claims of fraud against Sam Beckman Freed, and in the course of the inquiry, Turkish authorities have also seized the assets of Sam Beckman Freed and its affiliates. The Turkish Crimes Investigation Board takes on FTX. They're basically going to look into every single part of it, as obviously FTX also had a Turkish subsidiary. And as of this point, we don't have any crazy details on the matter, but it's interesting that Turkey is on the case. At the same time, the articles that I'm reading are absolutely crazy about Sam Bankman-Fried's properties, Sam Bankman-Fried's parents, and just so much crazy stuff is ongoing. An analyst has uncovered Sam Bankman-Fried's splurges worth $121 million in the Bahamas. And at the same time, obviously, people have put up some crazy theories about how much money Sam Bankman-Fried kept on the side. One of the problems with all this, though, is the fact that there's so much misinformation out there, and it's pretty hard to spot. Now, Elon Musk also actually noted upon this, and he said this. There was an article on the Business Insider, which is, generally speaking, quite a reputable source. From the perspective of, if it comes from Business Insider, it's not as if people think, must be fake. It can only be manipulated and a distortion of truth. But at least there's some credibility to it, because it's basically a legacy entity. Everybody knows it, and you can see that in the likes as well. Now, Sam Bankman-Fried, this is the title, reportedly owns a $100 million stake in Elon Musk's Twitter. And the GOAT himself, the man himself, said false. Also, business is still not a real publication. Just give up. Now, we can also talk for hours about this hacker. As I just said, there are many theories about what exactly happened with Sam Bankman-Fried's funds. There's many theories about what happened to the hacker. All I know is that things don't really make sense, and that many of these legacy news outlets are portraying the situation a lot less crucial and a lot less important than it really is. There's also, for example, John Dean, who rightfully so speaks out to say, any journalist who writes an article regarding Sam Bankman-Fried and FTX and doesn't use the words like fraud, theft, deceit, criminal enterprise, wire fraud, extradition, or prison should rethink their profession. And that's as a response to Charles V. Payne, who said, cray cray, not bad for a couple college professors, okay? And that is a little response to Wall Street Silver sharing SBF, his parents, and senior executives of the failed crypto exchange bought at least 19 properties worth $121 million in the Bahamas over the past 2 years. I wonder if his parents asked any questions why Sam was parking real estate in their names. And then the biggest response I keep seeing from people is, well, his parents were some very high-up lawyers. They probably knew that this was the best way to keep that money safe. Which is going to be a very big question in the near future. Exactly how much of his personal assets will he have to give up? And of course, that's going to depend on the charges. And as of this point, we don't even know if he's officially done anything criminally wrong in the US. He has obviously done criminally wrong in a couple of other countries. We'll most likely find out. But in the US, I don't know about that one. Again, what we think and what is the truth following the justice system are two different things. Now let us move into the key takeaways from the latest FOMC meeting minutes. Federal Reserve officials at their meeting earlier this month concluded it would soon be appropriate to slow down the pace of the rate increases, signaling the central bank was leaning towards downshifting to a 50 basis point hike in December. Alright, had to make a little account over on Bloomberg what we got here. Fed minutes set to show breadth of support for a higher peak rate. All you basically have to know, I've read 5 articles now, is that they really confirm yet again that rate hikes are going to be slower from here on forward. Now, taken from a couple of articles now, we cannot know the official outcome number, so to speak. We'll not know all the details, which obviously we're going to hear more of as we get closer to the official next meeting date, December 13th, 14th. But basically, as we already expected earlier, it still stands the same. Federal Reserve officials earlier this month agreed that smaller interest rate increases should happen soon as they evaluate the impact policy is having on the economy, meeting minutes today indicated. And though hinting that smaller moves were ahead earlier, officials said they still see little signs of inflation abating. However, they've noted as well that if these heavy hikes keep continuing, the risk to the financial system would be way higher. And the minutes now, again the meeting today, noted that the smaller hikes would give policymakers a chance to evaluate the impact of the succession of rate hikes, and the central bank's next interest rate decision is going to be December 14th. The summary did also note, however, that a few members indicated that slowing the pace of increase could reduce the risk of instability in the financial system, and others said they'd like to wait to ease up on the pace. Officials said they see the balance of risks on the economy now skewed to the downside. However, one thing you should keep in mind is that it's not all about the pace of these increases, right? We can easily look at the rate and think, oh yeah, it's going in some laddery shape. But the biggest caveat of everything is how high is it going to end up being at the end of the cycle, so to speak, right? Is it going to end at 4.5? Is it going to end at 6.5? Is it going to end at 9.9? That's, at the end of the day, the major concern of it all. Again, we have not had these numbers that we're seeing right now in ridiculously long amounts of time. Going into the when will the hikes end? Nah, we can't even just stop to speculate all this stuff. It makes no sense. All this information could change tomorrow, so let us just wait. Opening TradingView, I actually saw something else. Apparently, TradingView has a Black Friday sale, which I forgot about. But if you're into charting or trading, it might very well be worth it to pick this up right now, as this is literally when I buy my TradingView subscription every single year. As well, there's literally a 60% discount, and in my opinion, this is the only time to buy it, when there's a 60% discount, so yeah. Just a little friendly advice. I'll also leave a link for TradingView down below exactly to this sale, so you can check it out for yourself. If you're wondering what happened to the Bitcoin price during the minutes, honestly, not as much. It's obviously been pretty volatile today, sure. I mean, the price has already gone up and down about, let's say here, 2.3% or so, 2.2%, which is still a relatively big amount, but in comparison to what we've seen over the last couple of days, this obviously is nothing. And that was pretty surprising, but maybe it's because they've only been reiterating what we've already heard for the last couple of weeks. They've not been stating anything new, that the price didn't really do anything too crazy. I guess if you really start zooming in, the pump that it had right here, the excitement that it saw, is pretty unique. It is a pretty wild candle, slightly after the minutes came out. Or actually, this is whilst it was happening, now that I'm thinking about it. So I guess that's pretty cool. But that was it for today's little crypto video update. We have another cool Ripple SEC type of update coming out later today. If you guys are excited about that, make sure you press the like button on this video and make sure you turn that notification bell on. And I'll see you guys again in another video, most likely talking about the SEC.